Okay, so when trading flag patterns in the market, there are a few decent indicators you can use to help you determine whether that stock is going to continue to push up. One of my rules of thumb is that anything after the second or third flag is a lot less reliable and much more risky. The reason being is that people that held it from that first flag, eventually they're going to start taking profits. The more people that do that, the more the stock's going to drop and it can start a squeeze. And so you really want to be careful of anything after that second or third flag. Another reason is simply psychological. If you look at this chart here on CAPR, it got a little bit overextended after that third flag. Once people see that, they're going to stop buying and they're going to start covering, and so you really want to be careful after that third flag pattern. Okay, so another way to really tell whether that flag pattern is going to continue is you want to see it hold over that previous high and use it as support. Okay, you can see here on this first flag pattern, it bounced directly off of HMNY's high of the day right here. Okay, so that high was right here at $5.15. It made this push and bounced directly off of it. It did the exact same thing on the second push. It made this big push up here and it bounced directly off of that previous high at $5.50. And like I said in the last section, anything after the third flag is a lot less reliable, as you can see on HMNY today, but it's always a good thing for it to hold over that previous high, and if it can do that, it's usually a pretty good indicator that it's going to continue to push up. Okay, and so the last thing I want to go over is that the time frame you use is extremely important. You can look here on the 1 minute chart. It's just a lot more choppy and a lot less obvious where the flag patterns are. There can also be false breaks and false flags, and so you really want to be careful, especially new traders using these much shorter time frames. My rule of thumb is that anything after 30 minutes past the open, I always use the 2 minute and 5 minute. I can pull up the 5 minute chart here and you can see that the flag patterns are just much more obvious. You can tell where they are, and thus, in my opinion, they're a lot easier to trade. And so make sure you're using the best time frame for you and be careful with those much shorter time frames, guys. Okay, and with all that being said, that is the end of this video. I hope you learned a little bit and you can use it in the markets tomorrow. Make sure you come check out our free day trading chat room. I post a link in each video's description. Also, make sure you like, comment, share, and subscribe. It really does a lot to help support us, guys, so I appreciate it if you do, and good luck in the markets tomorrow. Thanks for watching.